Welcome to Turning Hard Times into Good Times. I am your host, Jay Taylor, and I'm speaking to you here from New York here. It is November 22nd, 2016. I like to remind you I'm also the author of a newsletter, Jay Taylor's Gold, Energy, and Tech Stocks, and that my company, Taylor Hard Money Advisors, is in partnership with Chen Lin, who publishes What is Chen Buying, What is Chen Selling, and Chen is actually off to some strange parts of the world, the Ukraine and also Morocco, to look at a couple of the investments that he is putting his money into now, and we'll be reporting back. And certainly some of those investments are things that I talk about from time to time in my newsletter as well, Jay Taylor's Gold, Energy, and Tech Stock. And you can sign up for my letter and Chen's letter at miningstocks.com, or you can call our office number here during normal hours, normal business hours in New York, 718-457-1426, 718-457-1426. We want to thank our sponsors for making the show economically viable. Our sponsors for today's show are Novo Resources, Klondike Gold, Auryn Resources, and Ariane Phosphate. I've titled today's show, The Road to Ruin, the Global Elite's Secret Plan for the Next Financial Crisis. Well, that's actually the title of a book that it was written by our main guest today, James Rickards. I recorded my interview with James back on November 2nd. It was about 6 days or so before the presidential election. And it is interesting to note that James thought the election of Donald Trump may be our last chance to retain what little freedom and liberty that is left of our government, that are provided by our government or given to us naturally, as our founders saw it in 1776. Interestingly enough, James thought it was a very important issue, and of course the odds seemed to be against Mr. Trump winning at that time, but nonetheless he thought that it was a very important positive if he did win. Now, I know there's lots of people listening to this show probably think otherwise, and as time goes on, we'll ferret that out as to whether it was a positive or a negative, I suppose. But now, as Rickards points out, the elite, at least at this point in time, up until now, have been planning a one-world government for all of us by getting rid of national sovereignty in favor of a one-world government, with themselves, of course, the elite being in charge. And Donald Trump said yesterday that the first day in office he will rescind the TPP. Well, if ever you wondered why the mainstream media have hated Donald Trump so much, I would submit to you that you need to look not much further than that. The issue of national sovereignty, the idea that the elite and those who worship the elite, having them in charge is no doubt what has caused so many people so much consternation since the election results and Mr. Trump's victory. I don't know about you, but I don't like the idea of government being further and further removed from me as an individual. Indeed, that is what Brexit, I think, is all about. I think it's what Marine Le Pen is about in France, similar movements in Italy, in other countries as well. And frankly, I think that's what 1776 was about. Taxation without representation is what it was about, and that's seemingly the direction of things. Why do you're just an individual, you don't have anything to say, we don't have to worry about you. Common folks, but certainly I think this election showed that common folks are getting sick and tired about having every minute matter of their lives under the control of faraway bureaucrats and bankers who are getting richer and richer at the expense of those who really create the wealth. I like to say the miners, the manufacturers, the farmers, and the inventors. While we can always hope the economic problems that have accumulated since the Nixon removed gold from the monetary system in 1971, we can always hope that they'll be solved somehow. But they seem to me so enormous that, quite frankly, in my view, it seems like about the only answer is a divine intervention. The global economy has been so badly removed from equilibrium that any return back may be far too painful to avoid, for any politicians to avoid, including Mr. Trump. I hope that's not true, but that's my fear. Rickards points out very interestingly, as you'll hear if you stay tuned to his discussion that I had with him, Rickards points out that to avoid, really rather than nuclear war, his concern is cyber attacks, and he'll talk about that and how cyber attacks can be used now rather than nuclear war as warfare. Why to destroy everything in sight if you can keep everything together and then control other nations? That seems to be the thinking. At least that's what Rickards is talking about. One of many things. Very interesting discussion I had with him. Trump seems to be offering a return, I would submit, to many aspects of the free markets. I certainly hope that that's the case. It has been indeed Keynesian socialism and the destruction of capitalism through the denial of price discovery of capital that has brought this horrific economic destruction about, in my view. At least that's one of many things, but that's probably the most important thing, is the destruction of price discovery of capital. So the really big question is whether or not it's too late. Rickard's book, The Road to Ruin, suggests that the global monetary system is changing very rapidly and that smart investors are exchanging worthless fiat money into gold, which James believes will transcend the price, will cause the price of gold to rise to many thousands of dollars. Well, one person who definitely brings some optimism to this show, and one of the reasons I like to have Michael Oliver with me every week, is Michael Oliver, who seems to believe that somehow free markets will emerge eventually. So thanks for joining me again, Michael. It's good to have you with me again.
I'm glad to be here, Jay. And if you hear any background noise, I'm in the airport. So,
okay. Well, I know you. I know that you had somewhat of an emergency and you needed to take your wife to the airport. I'm glad that you could be with us. But you sound good now, Michael. So, you suggested, you've been talking for some time, Michael, about these market plate tectonics, the really big moves, and you have been suggesting for some time that we would see stocks and bonds enter a significant bear market and commodities led by gold entering a significant bull market. And indeed, it seems like so far 3 out of 4 are proving to be correct, but the S&P 500 and stocks in general, in the U.S. at least, have not been cooperating with the views that you've provided for us through your momentum work. What do you think is going on?
Well, the S&P, if you look at developed economy stock markets, that would include Europe, Japan, and North America, and you treat them as a whole. In fact, there's an MSCI index of the developed market index of the world, ex emerging markets. And it looks distinctly different than does the S&P. So the S&P, the Dow, the NASDAQ 100, for example, are standouts. So you have to treat them as such. They are not, quote, the stock market of developed economies. They are unique to the U.S., and they are only inching highs. Again, right now, we're 100 points higher than we were 2 years ago.
Uh-huh.
Okay, well, 100 points is 5%.
Mm-hmm.
A little less than 5% actually on the S&P. We were 2093 in December of 2014, and today we're at 2190s. Okay, so that is hardly the kind of gain that people were in the market for over 2 years to make 4-point-something%. That's desperation income. It doesn't keep pension funds afloat. For example, they can't have that continue for another 2-3 years. They'll be bust. So something has to give way. And I think they're just inching, and I think they're going to break down. The momentum says they are. I don't trust price. It went up and made a new high finally above the high we made several months ago. It did it by all of the several points. My near-term to intermediate-term work says we're overbought by MSA standards, Momentum Structural Analysis standards, and I suspect it's a downturn. What I'm really watching right now is I think that bonds and stocks will join hands and go down together, meaning higher yields and lower stock prices, or lower bond prices, lower stock prices at the same time. Bonds have had a big collapse in the last few months, particularly in the last few weeks, a big one. Yields have gone up 1% in Europe largely, and here they've gone up at least 0.75% on the 30-year bond, while prices have collapsed. I think the collapse is real. I think there's more to it. Yields will go higher in the long run, and probably even in the intermediate term. But what I'm looking for on the bonds right now is a rally, a short recovery rally that is false. But I can see the setup for it. The technicals are there to justify a sharp counter-trend rally. Remember, bonds were up in the 160s, mid to upper 160s, and now we're in the lower 150s all of a sudden. I think you could actually rally back to about 160. Well, I can see the technicals for that, and the question is, what's going to cause that? And I have a suspicion what's going to cause it is a stock market rollover, another rollover from yet another new high that doesn't sustain. And that will generate some fear and flight to safety back into bonds, and that would explain why I think I see what I see in the T-bond market, namely a justified sharp short-covering rally caused by stock rollover. An interesting point was brought to my attention yesterday in an email from Peter Boockvar to me. Most frequently, you see him on CNBC.
Yes.
He noted that there was a peak after the Reagan election in November, early November to mid-November of 1980, his first election. This is one against Carter. And it was a very strong run-up to a new high in the Dow. And within a month after the post-election partying, because after all, you had just elected a president who was more market-oriented, more business-friendly than was the leading president, so therefore investors bought the market. Within a month, you were down 10% after that high. Within a year and a half, you were down 22% from that high. I tend to, but why? Because the market has bigger things to move on than who just became president. After all, even if a president is going to have a good outcome for, let's say, business, it isn't going to show up right away. They cut taxes. The effect of that might be a year and a half later before it has a positive impact. So those who immediately buy on, quote, good news or perceived good news are probably fooling themselves because there's a lot of embedded bad news built into the market, already needing to be expunged, namely mispricing of assets by central banks. Not only debt assets, but equity assets, and various major asset categories have been mispriced over the years because of central bank interventions. And therefore that, to me, will trump any, quote, good news you might want to interpret out of a Donald Trump victory.
All right. Michael, let me just ask you this, Michael, if there's a flight to safety, as you suggest, from stocks into bonds, causing a counter-trend rally in bonds, might there also be a flight to gold as a safety
I think so.
market?
Gold has been tending to move with bonds lately. As the bonds went down, gold went down. And I think that to some extent has helped the dollar, which has marginally taken out two prior peaks. The dollar index had peaked at 100 in early 2015, and again 100, I think, late last year, early this year on the dollar index. We got to 101 recently. So we've, quote, broken out on a price chart. None of our momentum work indicates that breakout is valid. In fact, everything says it's invalid. It is a bull trap, meaning if you buy that breakout, don't expect it to sustain. And our view is that if you back off the dollar index, which again has probably been influenced by the rise in rates in the U.S., if you back it off to about 98.5, any time next year, we're talking a couple % drop, I will violate a multi-year uptrend on annual momentum of the dollar index, and it will head down hard. So that has been another asset category that has been very dull, the dollar and the euro specifically.
Right.
They're range-bound this year to the tune of about 7, 8, 9, 10% at max from peak to below. And it's been up, down, up, down, up, down with no trend. Recently, the dollar's been firm, but there have been points of downside as well. So it's a very narrow little box for both of those major currencies. So there's one asset category out there that has not been volatile this year. And I think 2017 is going to see extreme volatility in the foreign exchange markets, which will also have further impact on those moving tectonic plates.
Yeah. So it's going to be a fascinating time. Yeah. It's going to be really fascinating. I think it's going to be a very, very fascinating market in 2017. We're out of time. Michael, thanks for being with us again. Folks, go to MSA.com, OliverMSA.com. A new look there to Michael's website. Consider subscribing to his excellent service. It's one I cannot do without. So thank you very much, Michael, for being with us.